Welcome to the Closing Bell, everybody, here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, security offered by Money Block. It is May 10th. The grindy market continues. No lack of headlines. One, happy birthday, Dad. But you basically saw that the major indices stayed in a very grindy range. The Dow Jones was the only index that finished in the red, was in the red almost all day. Down at 20,943, so obviously everyone's going to talk about that psychological 21,000 level, just below it. The S&P 500 did finish the day right off of its all-time highs, and you saw the SPX cash finish off the day. Again, a 7-point range in the S&Ps, very tight, up 2 points, $2.70 at 23.9960. You saw the NASDAQ and the NASDAQ Composite finishing right off their highs, up 340 on the NASDAQ 100 at 56.81. And the Russell 2000 continues to show some leadership today, and it was the best performing index, up 0.56%. That's good for 770 to the upside at 1399, still below that 1400 level. So small caps leading today, but still just right at that 200-day moving average. So the bulls still have their battle there. Taking a look at the VIX complex, volatility popped towards the end of the day. We saw that by the end of the session, it was trading at its highs at 1020. Obviously, from a macro perspective, volatility is it's cheap as heck. As a matter of fact, we've seen it trading at levels that, like as I had said, I hadn't seen it trade this low since 1993 at one point. We almost, and so there are people that are looking at these markets and listening to MarketStream that may not have even been alive when we were talking about that time frame. I have a few of them. As a matter of fact, I'm picking one up from college tomorrow. But with that all being said, there were some movers, and one of the most notable ones was crude oil. Crude oil finished the day up 2.5%. The driver was the bigger than expected draw. The EIA report came out and confirmed the API report. 5.25 million barrels were drawn from storage. Now, still, historically, though, you look at the 5-year average, we're well above the average amount of storage. And as far as this year, we're well above the average so far as the amount of storage we have. So we have quite a bit of supply to work off of, but that did not rattle the gasoline markets. There was a small draw from the gasoline markets, but really nothing that wasn't expected. As a matter of fact, it was a little bit smaller of a draw than what was expected. So we did see crude to the upside. We did see a little bit of a dollar pullback on the crude pop. Dollar did finish off of its best levels at 99.61. Watch that. That will drive crude. Brent contract finished down 61 cents. The biggest driver there, it looks like the Russians were basically adhering supposedly to the production cuts, but they had the largest delivery to India all of 2017. So they're still pumping oil and they're still delivering it, and India was the biggest recipient. We did see the bond markets pull off on price action after the 10-year auction. What does that mean for you as investors? That means that those risk-averse or safety traders are somewhat rolling off some of that trade. As a matter of fact, we saw the 10-year yield finish the day at 2.4%. Now, that's nothing monumental, but it's back above that psychological level. It's staying above its 20 and 50-day moving average. So yield bulls, in other words, individuals who want to see higher yields on the curve, on the 2-year, the 10-year, and the 30-year, well, they're getting what they're asked for right now. We'll see if that continues, especially with the headline risk still out there, both geopolitically and politically, as well as economically. Tomorrow, we will have PPI data, that producer price index, that's going to be out here for the U.S. We saw mixed data in China come out last night. We saw some pretty solid PPI data come out of Europe and the Eurozone so far. Let's see if the April PPI in the United States continues. That could be a guidepost for future growth expectations, and it's going to start putting some pressure on whether or not the Fed is going to be moving rates a little bit more aggressively than what is being signaled at this point. There's an 88% probability of rates moving to the upside. In other words, getting to that 1% or 100 basis points in the June meeting. We'll see if that actually is going to come to fruition, and there's going to be more pressure if we have a bigger than expected PPI come out tomorrow morning. On the other fronts that we want to take a look at today, let's take a look at some retail names. The Priceline came out, PCLN came out with earnings. Stock was down $86. That's 4.5% to the downside, trading at $18.24. So you saw a pretty big precipitous drop. Even though earnings were good, their forecasts were horrible. That is weighing on the consumer discretionary space. What's also weighing on the consumer discretionary space is Disney. Disney finished the day down $2.41. That's good for a 2.15% to the downside at 109.66. Clearly, you can see that Disney, though, was in a bearish trend even before earnings. Into earnings, looked like it was going to challenge that 20-day moving average, but the bears had already taken control in front of earnings. They came in, the estimate was at $1.45. They came in, it was just not a solid forecast. There's a lot of talk about how ESPN is weighing on the Disney properties, but at the end of the day, they got to roll out with some big movies, some other big movers. And the bottom line is that there wasn't a lot of buying today. It was well off of its lows, as you can tell, but it has to get up into that 112 range before we're going to see the short-term bulls start to take some action and start to gain some velocity to the upside. As I said, this did put pressure on the consumer discretionary space. XLY is the ETF that tracks that space. It did pull back about 31 cents. It's trading up a little bit after hours. We're still right around that close of 90.55. But you can see that the space in general is still well above that 20-day moving average. So even though these two entities, Priceline and Disney, came out, were negative on the day, the sector in general, that consumer discretionary sector, one of those offensive sectors that I refer to quite often, there's 11 of them, this one is holding up despite the fact that we had disappointment in those two consumer-related names. One other name that I want to take a look at is ticker symbol AGN, that's Allergen. Allergen came out, this is a biotech, missed on earnings. Watch this one closely. Down 879. That's good for a 3.69% pullback in the stock, or at 229.72. It's challenging its 200-day moving average. That means the long-term holders, individuals that have bought this stock 200 days or more, are now under pressure. The short-term and intermediate-term bulls were under pressure as of yesterday going into earnings. Post-earnings, stocks down pretty big today, 3.69%. Let's see what the shakeout is for not only Allergen, but also watch IBB. This is, again, one of those offensive sector ETFs that tracks biotech. Biotech track is also not only in the healthcare, but also affects the technology sector. Down $1.06 or 0.36%. But again, challenging its 20-day moving average, its or 50-day moving average. A settlement below on IBB of 291.99, which it did, and it's now above that after hours. This settlement right here now puts the intermediate term, in other words, those institutional investors in IBB and in the biotech space, on alert. They're digging their heels in. They got to hold this level if we're going to see continued upside bullishness in biotech. And that's, again, one of those offensive sectors we want to keep an eye on. Finally, there was some headlines. Boeing, midday, saw some headlines come out that they are grounding the 737 MAX fleet due to engine issues. They're doing some checks on the engines. That drew the stock down 373. That's good for a 2% drop in Boeing at 183.18. It's firmed up after hours, still at 183.21. But you have it challenging its 20-day moving average. This news has short-term bulls digging their heels in. We've got to see what the impact is after they check these engines. Any further engine issues or keeping these fleets grounded is going to be a potential weight on Boeing. We're going to watch that one going into tomorrow's open. All right, folks, that's it for MarketStream.live. This is May 10th. This is the closing bell. We'll be back. It looks like I'm not going to be back online for a couple days. Got to go out east to pick up one of my kids from college. But we will be back with Sunday night setups. I may be posting some intermittent videos so that you can keep watching here at MarketStream.live. Otherwise, check out all of our premium content that is available at MarketStream.live. And again, take advantage of the fact that under the homepage, you can actually go in and we'll do a risk assessment for you. It's a 3 to 5 minute risk profile, just answering simple questions that I can give you a risk profile. It's pretty powerful stuff, and it's all for free. All right, we'll see you later, folks, here at MarketStream.live. Take care and have a wonderful evening.